Food is an essential component of our lives, and yet one that too many people take advantage of. We can buy it cheap just about anywhere. If one store is too expensive, there are many stores nearby willing to undercut prices. But what happens when the supply chain breaks? What if there is suddenly more demand for non-perishable foods? How long can the supermarkets remain stocked? All questions most are unprepared for. You came here for the truth, so let me unveil that for you. Today we are going to talk about inflation. We are going to talk about central banks. I want to look specifically at what's happening with food because this really hits home. A lot of people are really unprepared for it. I can tell you that. I know that I do have people all over the world who subscribe to this channel who are in fact prepared, who are in fact ready, who are trying to make changes on a daily basis. Maybe they've planted a garden. Maybe they've bought extra bags of rice and canned food. Not because they think something bad is going to happen, but simply to be ready for anything. It's wise to always be prepared, no matter what the situation is. You know, people, they wait until the last minute, and when things are upended, when their lives are a complete mess, then they start asking the questions. They search online. How do I fix this? How do I get this? It is nonsense. You got to be ready in advance, okay? So we're going to talk about that, of course, and I want to look at what's happening in the economy because so many people have lost their jobs. So many people are dealing with hardship today, and I wanted to bring up some of those issues and take a look at it. All right, let's begin. I didn't want to get into the actual article here, but essentially what I'm just showing you is that the cost of food has certainly increased. If you take the actual official websites and you go to them, and I will show you those right now, but they will highlight the fact that inflation of food is it's barely up. I mean, sure, it is up compared to where it was at the beginning of the year, but it's only just a small amount. Now, we know that isn't the case. We know that isn't true. However, all of these methods in which they calculate are meant to mute the actual volume. They are meant to subdue the reaction. And of course, they don't want people getting upset. They don't want people getting worried. So they do this intentionally. Now, what I'm showing you here in just a second is various sources, the USDA and others, and I'm going to give you what they claim is reality. Let me know in the comment section down below what is happening to your prices of food over the last 6 months, over the last 12 months, where you are. If you're located in Canada or the US, if you want to mention specifically where you are, that's even better. We need to learn from each other. There are many sources that we can do this from. Here's one example of the quote unquote official inflation. You can look at a website called Numbeo or Numbeo. I don't know how they pronounce it. I've shown this many times before, but it highlights prices that people pay for different things. Maybe it's a rental price, maybe it's food prices and things in different cities around the world. And the interesting about it is, yes, you're going to get a range, you're going to get a wide range, but it's coming directly from people, not from the government sources. But I like to look at that as well because we're going to see it from all different angles. This right here is the USDA Consumer Price Index for food, not seasonally adjusted. And as you can see right here, I don't know how, but all items, consumer price index, a measure of economy-wide inflation, increased by 0.3% from July 2020 to August 2020. That's it, 0.3% month over month. Then they claim here that food prices were 4.1% higher than August 2019 level. Now, what do you think? Have food prices increased 4% from last year to this year? I have heard people telling me that it's more like 50% in some cases, depending on the type of food, of course, depending on where they are. But certainly, I think that 4% is inaccurate. That's just me, but you tell me where you are and your personal experience. Here we have the BLS, percentage changes in CPI for all urban consumers, the CPIU. So you're looking here, all of the breakdown below, all items, food at home. It goes into energy, it goes into all these different things. If you are interested, you can check it out. But you'll look around and you will see prices that have really rapidly changed. This gives us February 2020 on the left-hand side, moving over to August 2020. So it gives us some insight as to all these different items and what has happened. But largely, people are spending more on things today than they ever have before. So what is happening with all of these different statistics? If people spending more, less disposable income, less economic benefit, you as an individual, you want to be able to buy things that you deem nice and appropriate and whatever you want. But if you've got less disposable income, you're likely to keep that for a rainy day, or at least most people should. But when it's not accounted for, you run into some serious problems, and that's what we're dealing with today. This is trading economics, but they're actually pulling the data from the BLS. Just to give you an idea, they're showing us over 4% inflation with food specifically. As you can see in the chart here, which goes back 2016 up until the present, we had this big spike in early 2020, as everyone is aware of. If you pull this chart back all the way, it will show you that, there are times when it's up, it's down, it's up, it's down. Right now, however, it is certainly elevated. Now, we've got supply chain disruptions. We had serious problems, particularly earlier on this year. But what I am trying to highlight in this case doesn't have necessarily to do with what we're experiencing right now. Because tomorrow, there could be an event which wipes out a whole city, all their farmland suddenly floods. Now what do they got to do? Well, you are now buying all your crops from the city nearby, the farms nearby. And what does that do? It increases the prices because the transportation costs. But now the demand is suddenly much higher. They are going to be charging more, or they simply can't keep up. So now you're searching around different buyers, different suppliers. You start to have shortages in these stores. That starts to create problems for the consumers. There's so much here. If you do any sort of importing and exporting, which I'll talk more about in a minute, you will notice that right now 2020 is an extremely unusual year for many, many different reasons. And then we have this, gross output by industry. And you can look down here, the Bureau of Economic Analysis pulled this out September 30th. So we're looking at new data, and you could see what has happened here 2019, 2020, and then the first half of 2020 where they break it down in percentage terms. Take a look at all of this. I think it's pretty obvious when we get to arts and entertainment and recreation, accommodation, and food services beaten down severely. The nominal change, minus 46%. If you look at adjusted by M2, minus 56%. On the other end, we can see government, federal, positive 4.2%. Construction barely down, minus 0.5%. The reason I'm showing you this is that there are always going to be pockets. So if somebody is with the federal government, or somebody is in the construction industry, or in this case here, finance and insurance, which is up slightly, they might say everything is totally fine. There have been no disruptions. I'm not seeing it. My company is hiring individuals. We're all good. But if you happen to be in that arts, entertainment, recreation, accommodation, food services, you're going to say this is a nightmare. Not only are things bad now, but the prospects are terrible. Isn't that interesting? So it depends on where you are at specifically, who's around you, what's happening, and so on. So I just wanted to highlight this to break it down on a more detailed level, because as I said, more needs to be said than simply just spouting out a number, because that number isn't going to tell the full story. Real Investment Advice put this out, and I just wanted to show you, there's a whole article here, but then they happen to quote all of these different job cuts and so on that have been happening. And of course, this affects a lot of people in a lot of different industries. I've brought up some of these. I'll just fire through a couple of them really quickly. Regal Cinema Theaters shutting down, 546 theaters. Imagine how many people work in just one theater, multiply that by 546. AMC Entertainment running out of liquidity in about 6 months. San Francisco rent down 20%. I'll show you more information about that in a minute. Anheuser-Busch will be laying off 400 employees. Allstate just announced that they'll be laying off 3,800 workers. JCPenney says it's going to be cutting 15,000 jobs. More info about the job situation not looking good. Retail store closings getting worse and worse. Bankruptcy filings in New York City have risen 40% so far in 2020. And it goes on. What we're looking at is a historic level of bad news. And what is the proposed solution? It's always print more money, reduce interest rates, and bigger government every single time, but that never, ever, ever resolves the issue. And we know this specifically because during the financial crisis, they did all of this. And here we were all the way into 2019. They still hadn't pulled back on all of their stimulus. They never normalized the balance sheet. And now they're apologizing for bringing up interest rates to a historic, very low number of 2.5%. That's ridiculous. And they left off at $3.5 trillion on their balance sheet, and they said that that was too little. We made a big mistake. Are you kidding me? This is absolutely not a recovery, and yet they make us swallow that every single day. Rents are tumbling and the number of homes listed for sale are soaring. All signs that the exodus from San Francisco is not losing momentum 6 months into this. So this chart right here basically just shows you a comparison of San Francisco to California in general and then the USA. Big differences here, obviously. This is very interesting because San Francisco, an extremely expensive place where just a year ago was in a complete 180. Now things have really changed. I'd like to see what happens throughout 2021. That's for sure. I'll keep you up to date on it. Stay tuned. Worst in the state. San Francisco sales tax data show likely population decline. This is what happens for more than one reason. We have seen many people say, I am leaving California. I simply cannot take it anymore. Big businesses, wealthy individuals, and with the potential for increased taxation and regulation, it seems like that will in fact increase. September Class 8 orders clear 31,000 for the best showing since October 2018. I have told you that when we look at freight, when we look at what's happening with imports and exports, there's a lot going on. And certain things are terrible. Certain things are down heavily and others are actually moving up. This one happens to be something that's doing quite well. We're talking about the big trucks, the big rigs, and clearly these corporations who haven't been hit by this situation are keeping up the demand. I don't have more information on this, but just wanted to make it very clear that it isn't just one-sided. There's always going to be that gray area here. And so at least in this case, we are seeing some demand for what we have. I've already talked about this previously, but it's coming up again, so we can expect that it will only be a matter of time before it's official. Bank of England asks banks on readiness for negative rates. My friends in UK, and in fact, everywhere else, you better be ready for negative rates. It didn't work in other places. Look at Europe, look at Japan. Those are the two primary examples. Very unsuccessful, and yet they want this everywhere, it seems. The Bank of England has asked commercial banks whether they are ready for negative interest rates, signaling that the central bank is moving closer to cutting its key interest rate below zero. My opinion, it's a huge mistake. It's a terrible idea, but they'll probably go for it anyway. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. So please click that one button on the way out. Thank you. If you want to learn how to sell stuff online, if you want to understand e-commerce, you can take courses out there. They range from about $1,000 to $2,000. Or if you just want to get your feet wet, if you want to get up to the intermediate levels, you can do so for free at the AmazonGPS.com. Do you want to understand the financial system? Well, I'll tell you right now, it's complex, it's convoluted, it's messy. But you can learn everything in a very, very simple fashion in these two books, Definitely check them out at the link in the description if you want the audiobook instead, themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? If not, you gotta watch it. Click it, I'll see you there.